Paramount Skydance just agreed to delay its massive $110 billion merger with Warner Brothers until as late as June 2027 to fight off state antitrust lawsuits. The stock reacted by hitting new 52-week lows at $8.21. We ran the one-year daily FSR to audit how the data structure held up, leading into this headline freeze. The regulatory pushback on this mega media merger is intensifying. A coalition of 12 state attorney generals got a temporary order forcing Paramount to pause the deal while facing potential penalty costs of roughly $650 million per quarter if it stalls past September 30th. Add in lingering integration costs from the Skydance acquisition and declining traditional linear TV revenues, and Paramount's been squeezed into a tight spot. Looking at the one-year daily chart, Paramount scores an overall FSR of 63.6%. The red dash line marks the one-year average price around $12.50. Notice how early in the cycle Paramount traded near its 52-week high of $20.86, but starting around window 115, the price cleanly crossed below its one-year average and never recovered. The rolling FSR, averaging 91.4%, collapsed sharply down to 80% around window 145. The structural break flagged major instability as merger uncertainty crept into price action. While media executives pushed the narrative of creating a global powerhouse, the data showed a stock steadily losing momentum month after month. Analyst average target sits at $11.79, but recent updates like Wells Fargo dropping their target to $7 reflects the reality of a multi-year legal battle ahead. This is what a stock looks like when regulatory overhang completely replaces fundamental trading. Full data breakdown and predictability tools available at predictability-api.com. Link is in the description. Thanks for stopping by. We'll catch you in the next one.